Most traders say they want discipline, but what they really want is results. And those two things are not the same. Because discipline is not something you turn on when you feel motivated. It is something you build when you don't feel like doing the right thing. Through my years of trading, I learned something uncomfortable. The problem was never that I didn't know what to do. I knew my setup, I knew my risk, I knew my rules. I just didn't follow them consistently. And that is where most traders get stuck. They think discipline is about willpower, about trying harder, about being stricter with themselves. It's not. Real trading discipline is structural. It's environmental. It's psychological. It's built before the market opens, not during the chaos. So in this video, I'm going to break down what discipline actually is, why most traders fail at building it, and a practical framework you can start using immediately. First, let's define the real problem. Most traders operate emotionally, even if they believe they are logical. You wake up feeling confident, so you take trades aggressively. You wake up feeling uncertain, so you hesitate. After a loss, you feel urgency. After a win, you feel invincible. That is not a strategy. That is emotional fluctuation. In my own trading, I used to think discipline meant controlling my emotions in the moment. But the market moves fast. Emotions move faster. Trying to control feelings while money is on the line is like trying to stop a wave with your hands. What changed for me was realizing this: discipline is not emotional control. Discipline is pre-commitment. It is deciding who you are going to be before the pressure arrives. So let's build this step by step. Step 1. Define non-negotiables. Most traders have guidelines. Very few have non-negotiables. A non-negotiable is a rule that does not change based on how you feel. For example, maximum daily loss, maximum number of trades, risk per trade, specific entry confirmation criteria. Through my years of trading, I noticed that whenever my rules were flexible, my results were inconsistent. The days I respected hard limits were not always the most profitable days, but they were the most stable, and stability compounds. Write down 3 to 5 rules that cannot be broken under any circumstance. Not adjusted, not justified. Not just this once. If you break one, you stop trading for the day. That consequence builds identity. Step 2. Reduce decision fatigue. Discipline breaks down when your brain is overloaded. If you are scanning 20 charts, changing time frames constantly, and watching social media during the session, you are draining your mental energy. And when mental energy drops, impulse increases. In my own trading, I simplified everything. Fewer markets, fewer setups, fixed position sizing, a structured pre-market routine. When the number of decisions decreased, consistency increased. Ask yourself, what can I remove? Discipline grows when complexity shrinks. Step 3. Track behavior, not just profits. Most traders only track P and L. That's a mistake. Profit is an outcome. Discipline is a behavior. Create a simple daily scorecard. Did I follow my rules? Did I respect my stop? Did I take only planned setups? Did I stop at my daily limit? Score yourself from 1 to 5. There were months in my trading career where I had green days but low discipline scores. And those months never ended well. The behavior eventually caught up to the results. But when my discipline score stayed high, even during red weeks, my equity curve stabilized. You become what you measure. Step 4. Build a pre-market identity check. Before the market opens, ask, how do I feel today? Am I tired? Am I frustrated from yesterday? Am I trying to prove something? Most rule breaking starts before the first trade. Through experience, I learned that some days are not trading days, and that realization alone improved my performance more than any indicator ever did. Discipline includes knowing when not to participate. Step 5. Make boredom your advantage. Here's something most traders won't admit. They don't break rules because they don't know better. They break rules because they are bored. The market is slow, nothing is happening. You want stimulation, so you manufacture opportunity. Professional traders understand this. Boredom is not a problem. It is a filter. If nothing meets your criteria, that is not lost opportunity. That is confirmation that your standards are working. When I stopped trying to be constantly active and accepted that some days would be quiet, my results improved dramatically. Action feels productive. Selectivity is profitable. Step 6. Use delayed reaction rules. If you feel the urge to take a trade outside your plan, wait 5 minutes. If you feel the urge to move a stop, wait 2 minutes. If you feel the urge to revenge trade, step away from the desk. Discipline is often just a pause inserted between impulse and action. In my own trading, I noticed that most bad trades felt urgent. Good trades felt clear. Urgency is rarely your edge. Clarity is. Now let's tie this together into a simple, actionable plan. Here's your discipline blueprint. Write 3 to 5 non-negotiable rules. Set a fixed daily loss and trade limit. Create a behavior scorecard and track it daily. Do a 2-minute emotional check before market open. Implement mandatory pauses after losses or rule-breaking urges. End the day by reviewing behavior, not just money. If you apply this consistently for 30 days, you will notice something powerful. Your confidence will no longer come from profit. It will come from control. And control builds consistency. Consistency builds stability. Stability builds profitability. Discipline is not about being perfect. Through my years of trading, I've broken rules. I've had emotional days. I've taken trades I shouldn't have. But the difference now is awareness and structure. Discipline is not built in a single strong moment. It is built in hundreds of small, restrained ones. If you focus on building structure instead of chasing motivation, your trading changes. You stop trying to feel ready. You start being prepared. And when preparation meets probability, results follow. If this helped you see discipline differently, like the video and subscribe for more content focused on trading psychology, structure, and consistency. Because skill matters. But behavior determines whether skill ever gets a chance to work. And the traders who last in this game are not the most emotional, the most aggressive, or even the most talented. They are the most disciplined,